Morning, everybody. Just as a quick sound check, can you just enter in the comment box that you can hear me okay? Brilliant, good stuff. We'll just give it a minute or so, just in case anybody else is going to jump on the call, and then we'll just start working through things. Whilst we are waiting, though, I've shared my screen there with some, which was in the Telegraph. I'm going to start with that. Again, this is a further check. Can everybody see my screen all right? Brilliant. It's always a good start. Right, we'll start there now. So just to go through a couple of basics. So what I'm actually going to do, I'm going to share a couple of news articles, which I think is a great starting point, because there's a lot with regards to what's out there in the press at the minute, which really needs to be filtered through into the business world as well, just to understand what we're actually going through. We'll then build that out in terms of getting the basics right with regards to the data. Then feed that into a cash flow system and how you can model that to try and understand the different gaps. But to start off with, let's just put it in a bit of context. I mean, everybody's fully aware in terms of the health sort of side of things, but as has been reported in the Telegraph, we are suffering from the biggest economic shock in 300 years. But I think it's important just to highlight, as things hit rock bottom, as is shown in that article there, and where things may well bounce back at. So the sort of cash flow struggles which business are faced at the minute, there are going to be peaks and troughs with regards to it and different challenges as we work through this. Now, understand what goes on each of your own individual businesses is a great starting point to know where you need to be. So the policy we're adopting for clients is to first and foremost to say, look, let's just remain calm and let's try to understand the data. I get the date decisions. Once the data is up to date and you fully understand the assistance out there from HMRC, local councils, the banks, etc., you can then say, right, what are the options on the table? By having that alongside the data up to date, means you can better understand what you actually need, which is what we'll build out in the course of this webinar. But the key point I want to highlight here is obviously you can see how low that chart actually goes, but how much of a bounce back people are consistently predicting in the current climate. Now, again, it's predictions. There's no guarantees of anything, but we need to have every business best positioned with current resources to bounce back. Now, that means getting different resources ready at different time to enable that to happen. So that was the first article. I just thought to say, just to kind of hit that home, it's something worthwhile just bearing in mind. Now, the next article I'm actually going to share with you is actually things I found on Sky News there last night. So here's the next one. And again, it just goes to show what we're faced compared to previous things which have happened in the past, previous financial crises, world wars, etc., etc. And again, it does just give you a bit of a feel for the sort of problem which we're facing. But the key thing which forms the foundation of what we're going to be going through today is this. And I think a lot of people are missing this. We're seeing it from a health perspective, but we're not factoring this in from a business perspective. We are currently in totally unprecedented times. But when this ban gets lifted in terms of getting out there and operating automatically, when that gets lifted, that doesn't mean that's the end, because the sort of health concerns are going to, again, have a knock-on impact for businesses. So it is more than likely, based on current predictions and all of the information out there, that we will potentially face a second and third wave of COVID-19. As everything gets lifted, as there's more strains on health, as more people catch the disease, this is just part one. Now, part one, based on this, and again, you've got a bit of now and a bit of visually, you can see what it's like there now. Granted, this may be the biggest problem now, but just to get over this is not necessarily going to be enough, because I say, if we then face a similar but lesser problem further on again, what are we going to do to prepare for that? If we then face this 3 times rather than just the once, what are we going to do then? Because if it's a case of we get over that first hump there, and we say, right, we're really going to go after this, we're going to recruit 10 members of staff, we're going to invest all this, then all of a sudden, you've got all those overheads and you're prepared for wave 2, you've got a bigger problem than what you actually faced the first time around. So we need to factor that in. We need to watch the warnings on the news, think about how that's impactful business-wise, but think of waves 1, 2, and 3. Don't think this is a once-only problem. and also be appreciative of everything we're doing here, that there's a lot of uncertainty around this, and nobody knows the perfect answers. Nobody knows what's going to happen when. Is likely to be any changes, as say there tomorrow? Highly unlikely. Is there likely to be any changes in 3 weeks' time? Who knows? Is it going to be 3 months, 6 months? We don't really know. I mean, you've only got to again watch the news as well, say, for example, last night they were talking about the statistics aren't right. So the statistics aren't right. We're already working on less than perfect data, shall we say. But let's work with what we can do. But I think just setting the scene with regards to walking through those sort of side of things there is a great place just to start, and always see with what's being put out there on the news, and probably less on social media. I think a lot of that scaremongering. Work with what you can, but be sensible about things. But I say just expect the different curves there, because they are going to impact all businesses. So I'm just going to stop sharing that, but I'm actually going to move on to a bit of software here, which is it. We are giving all clients. Give me 2 seconds. I'm going to jump onto that there now. So can everybody see that there now with regards to the actual graph and the various? Well, there's 2 different lines there you should be able to see. Can everybody see that all right? I'll just scroll down, make sure everybody's okay with that. That's filtering through to everybody okay? Oh, right, okay. Let me, how about that? Got that? Perfect. Right. So some basics and some basic housekeeping. I'm going to start with. Everybody knows I like Xero, massive fan of Xero. You've got to make sure your data's up to date. Now, again, we've all got time on our hands there now, but I say make sure your bank's reconciled. Make sure all of your income's in there, all your expenditures in there. Make sure you understand your business. So liaising with us, if we're already your accountants, liaising with us so we can help you with that. But better understand your business, better understand your margins, and start taking a closer look at the various different things which you need to better understand. Now, that might be relationships between income and costs. That might be performance of staff if you've got a team already. That might be different periods of the year. So you might find, because of what's going on there now, you might miss the busiest period of your year, and you've got to factor that into things going forward. But by going down line by line, and again, so you can just scroll down, I've put this out like an accountancy side of things, so it's easier for me to relate and convert to. But if you go down line by line and have a look at, say, for example, income you get every single month, line by line cost-wise, and start understanding those, you can start making some educated presumptions and do some modelling without any long-term detrimental impact. Now, what I'd say with regards to costs, there's 3 ways of looking at these, and I think they're often, say, not all considered. The first thing with costs is cutting them, an obvious option. A lot of people are quick to cut them. But off the basis of cut them, and I just want to give a bit of a case study. Thankfully, none of our clients have done this, but I've seen it on the press. Far too many businesses, when all of this kicked off, just shut their doors and got rid of all of their staff. Now, that drastic approach to cost cutting has cost those businesses more than they will ever imagine. Even if they were able just to stay up and running for a little while longer, they could have exploited some or all of the options which came to light after they'd closed their doors. One of which is the financial support towards their staff. Others is grants from local government with regards to small business rates relief. So they were too quick to act, and they just said, right, I'm just going to cut costs. Cutting costs is not always the best option, but it is an option. The next thing with regards to costs is getting more for your money. So, for example, for us as a firm, we could just keep doing what we've always done and just churn out accounts, tax returns, everything like that. But we're not. We're doing things like this. We're running webinars like this. We're giving this software here free of charge to all of our clients to fully utilize this. No charge. We're giving time away free. We're giving you the resource. I know some other people are on the call there today. To see one of our clients to say it looks after IT. Again, they're giving some great support and some great knowledge out there to help business owners. So if you can get something more from costs you're already incurring, why not use this now? Why not use that knowledge, that expertise, that resource to give yourself the best chance of bouncing back? So that's option 2. So number 1, cut your cost. Number 2, get more from that existing cost. And with regards to things, then option 3 is say, look at spending more. Now again, spending more, you might think that is a crazy suggestion to make in the current climate. Why would I ever want to spend more money in the current climate? Well, I'm going to use us again as a perfect example. We know that there will be a bounce back the other side of this. we know in terms of our competitors, and think of your competitors, we know there'll be fewer accountants around at the end of this. We want to pick up that work. How can you do that in your business? Is it a case you're going to have to work more hours? Is it going to be a case if you're going to have to recruit more staff? Now is the time to potentially invest, both in terms of exposure through social media and other advertising tools, to let people know you're still here, to let people know, because you will be remembered for this, what you're doing to support people out there. Now, it might be charitable causes, you might be just helping out a little bit along that side of things, and volunteering with the NHS, it might be a case of webinars, anything like that. If people know you're still here and you're making a difference, you will be remembered off the back of it. And if that means incurring a little bit of cost, that may well be a good consideration to do there now. So I'm going to speculate to accumulate off the back of that. So by investing in marketing, which I had a call this morning to do so, I feel that'll be beneficial to my business, but I do know there's a risk to it. But I've worked out what that risk is going to be. So cost-wise, 1, look to cut them. 2, look to get more from them. Or 3, look to spend a little bit more. Then at least it just gives you something else to work around. Now, going up to income-wise, again, have a look at your customer base. Now, we'll see with regards to the income side of things, have a look at customer by customer and do a risk profiling assessment. Now, I know some of our clients have already started doing this, but have a look down all of your previous customers and consider how many are likely to come back. Consider when they are likely to come back and in what shape or form. Some people are going to find there's going to be a queue at the door, desperate to get in as soon as this ban's lifted. Other people, it's going to be a lot slower. But by modeling all of these things within this software here, you can actually go through that and start seeing what sort of impact that's going to have within your business. So what I've done here, I've just done 2 different scenarios. This is what these 2 charts are here. So what you might want to do, say 3 scenarios. You might want to do a scenario, if this had never happened, what would your figures actually look like off the back of that? If it never happened, where would those figures be? Now look at a worst case scenario and think, right, okay, worst case scenario might be this pink line here. And say, right, okay, that I can see that's what's going to happen with my cash flow. So what these lines are here, these are saying what your cash flow position is likely to be in your business. So if you can see on there, you can see client financial struggles. So the base budget, before any of this came about, based on all, and they say this is all demo data, they say beforehand I would have expected about £25,000 in the bank. Prior to this, I might be overdrawn by £13,500. So straight away there, you can see the gap. So off the back of having that gap, I can move it along. I can see where all this is here. I'll look at where the biggest gaps are, and you can see time by time, month by month, the sort of gap you're going to have a look at between those. But like I say, try 3 scenarios. So try the scenarios you've got there now, try a worst case scenario, and try a couple of other scenarios, and just consider what you're really looking at. Try to consider the scale of the problem you're facing. Now, what actually happens within this software, and I'm going to go on to another reporting feature within this, there's other reporting tools. So if I click on here, there is a scenario comparison. You can actually have a look at scenario comparison here, where once this loads up, if this is going to load up, there we go. You can actually add your various scenarios all on the same chart and take ones off and just compare where those are going to be and see it against performance. Now, another thing I love on this is budget variance. So when you're doing all of this modeling, wouldn't you like to know, based on whichever budget you want to do, so let's do this one here, based on the budget you've set yourself, pick the period, so let's just say last month, how far away are you from that actual target? So as more data comes out there, as more information is released by the government, as hopefully you get bits of support dropping through with regards to local authorities, HMRC and everything else around that, start factoring in how you can refine that data. So by refining that data, you can then go back and you can remodel that cash flow, which we started off with. So you're getting better data and you can start offering more insights with regards to where you're going to be. So you were at the forefront of the data. You're working with the best possible data you could ever possibly have to understand where you might be. Now, again, you can, even within this year, you'll see this bit here where you can actually kind of set yourself a bit of an internal target for whereby it's going to notify you when you're going to actually kind of breach that target. So if, say, for example, you had a bank overdraft functionality of £20,000, which you can access, this data is telling me on the 28th of September that is going to be breached. So you know how much of a window you've got before serious issues may well come about. So it gives you data to make decisions. Now, by having decisions, you've got the basics right, you've got the modeling right, you then start saying, right, I'm going to look to finance that. So what are you looking to finance? Are you looking to finance just filling that gap? Just at least you continue trading as you were beforehand. Or better still, why don't you finance a better business? Why don't you get that finance to either invest in terms of marketing resource or improving certain bits of infrastructure within your business and come back a better business off the back of this? Because off the back of this, you're going to know how much you're going to need based on data you've got there today. So less than perfect, but it's the best you're going to potentially get your hands on. But use that investment to actually invest in your business in the right sort of things and start modeling what that might do. So again, add another scenario. Say you might want to just click on the scenario feature here, just add another scenario there and say, right, look, okay, if I were to recruit another 2 members of staff, what would that do? If I were to invest in a whole load of marketing, what would that do? Then model things against it. And if it doesn't work, you've got the data there to see after month 1, month 2, month 3, whatever that is, to drop it. Just don't do it. But you can hold your costs accountable against themselves, but you know what you need to go and ask for, which leads me to one of the other common mistakes, which again I've heard of. Thankfully, our clients haven't done this, touch wood, yet, and I hope they don't. But other clients of other businesses, of other accountancy practices, have been very quick to go to the bank. They are going to the bank with less than ideal information saying, I want to take advantage of the government-backed loan. We know there's no fees, we know there's no charge, we know there's no interest for 12 months. Please give me a loan. They then tell them a figure which they want. It's the figure they think they want. It's the figure they think they need. But is it the right figure? Is it the figure based on modelling which has been factored in like what we have done here? Because if they go and get that and they either spend it on the wrong things or have asked for the wrong sum of money, what do you think the bank might say when they go back to them a second time round? I can certainly have a guess. These are not unlimited resources, and none of the support out there at the minute is unlimited either. We are going to have to pay this back. Granted, the grants are on loans, there's no payback as such. But the bottom line is the government needs to get this money back, which they are investing in businesses to support them. They need to get it back, and they will get it back through higher taxes and other measures which they will introduce. So don't waste this opportunity. Don't get that support from the government. Don't go and get that bank loan, which is not the right figure, because you might not get a second bite of the cherry. Get the right figure and get the right amount of money at the right time. And again, another simple thing with the bank loan, for example, if you went to the bank loan on day one of all of this happening and you get your 12 months interest free and you do nothing with it for the first month, well, you've just lost a month's worth of interest free loan. If you go for it now, having modelled things out and considered different scenarios, you've got a full 12 months to take advantage. A simple but an all too common mistake. People are rushing. Get the relevant steps in place to go for it at the right point in time, to ask for the right sum of money, so that when you actually get that, you put that into the right sort of resource to help you hit that peak I said there before. So you bounce back, but then you're also better prepared for that second and third wave. So again, it gives you some visibility, some long-term vision. But whilst you're all doing this, no firm long-term damaging decisions are being made. You're just modeling the scenarios here to consider different things. And the great thing with this software is it links directly back with Xero. So it's constantly having a look on that report there before. It's constantly looking back and comparing actuals against budget. So once you've built it, it's just a case of modifying every time you wish to, just to change the budget. But then you can see how well or badly this is doing against budget and just constantly keep refining that data. And it gives you the best possible chance of understanding the cash flow gap, predicting the cash flow gap, and doing something about it to best protect your business and bounce back the other side of things. Now, the strategy side of things and how best you use that money is something we're coming on to on Fridays. So Friday's session is also at 12 o'clock. So for those who haven't booked onto it, please do book onto that as well. But I'm going to stop there for a second because I say I've tried to structure this so I do about 20 minutes of content and 10 minutes of questions. Has anybody got any questions? And if so, if you put it in the chat box, I will start running through those there now. So I'll let you start typing away, hopefully. If there's no questions, we'll get an early lunch. And it all goes quiet. Right, so a question comes to there with regards to Xero. The best thing, the tutorial videos on Xero is YouTube. In normal circumstances, we would run a whole load of Xero training sessions, and we may well do that in due course. But time's of the essence, and they say we don't want clients to fall behind, and naturally we have to apply our resources in the right sort of areas to help clients where they need those. And Xero already has fantastic things on YouTube. So if you want to kind of get some quick tips on Xero, have a look on YouTube, some great tips on there, and they can just walk you through the basics. Yep, the Float app software is free. Float have kindly given us this software free till the 31st of May, so we have unlimited licenses with regards to this. So anybody that wants access, needs access to this, wants a Xero info's up to date, give me a shout. I will plug it in, and then you can take advantage of it and start working through this. And again, what I've said is, I know it was on our newsletter there last week, come to the webinar on Friday. After that webinar on Friday, arrange a one-to-one call with us so we can, for your business personally, start working through some basics with you so you can start having a little bit of a play around with it. But let's not play around with it too much until you've at least done that webinar on Friday and then booked in that appointment for next week. So I'm doing 30-minute sessions. The team are aware of this as well. So we're then going to jump onto it as well. Right, so I've just seen another query on that as well. Right. No, I've seen a question there before. If you went to the bank and you actually need more, it's not a closed door approach. So with regards to the government back loan, I genuinely don't know whether you'll get a second bite of the cherry, because I think you might. Because bear in mind the government are uncertain the time frame. I think more support will come if this lockdown gets extended. But there are other streams of income as well, which actually falls quite nicely onto something else, which is kind of related to this webinar, but kind of not. The government back loan, it's a great initiative and is a brilliant tool to take advantage of in the right circumstances. Now, there were some horror stories at the start whereby I heard, I won't mention the bank's name because I heard it third hand, so I don't know this for definite, but I was told that they were quoting, beyond the interest-free term, 29% APR. Now, if you are going to take advantage of this loan and not repay it within 12 months, it may well be considering more commercial loans rather than just the government back, because they may in the long term work out cheaper depending on how much you're borrowing and over what term. Now, that's something you want to look at. Again, give us a shout. We're going to obviously point in the right direction and see what we do around that. And again, it might be a case of modelling the two scenarios, one against the other. But there are commercial options in addition to the government backed. But I am not aware of two bites of the cherry with the government backed loans, unless, as say, this lockdown gets extended a little bit further, in which case they're going to have to be a little bit more flexible, because at this moment in time, we are, like I said, we're working with imperfect information. Is this going to be 3 months of face? Is it 6? Is it going to be longer? I don't know. Me personally, because I'm applying for the loan as well, me personally, I'm working on 6 months. So I think that's a fair compromise to make to anticipate for the impact. So any more questions? All seems to have gone quiet. Anybody that wants access to Float, contact me. Just drop me an email. Everybody should have my email address, graham@gtaccountants.com. So say I can plug that in for you, and then you can play away with it. But like I say, feel free to play with it. I've got no problem plugging it straight in for you. But I think if you watch the webinar we're going to do on Friday, and then you have the one-to-one call with us, you might just save a little bit of time as well. Somebody just mentioned a comment there as well, reference membership companies and some of the frozen payments. Again, I think something to consider in the current climate is if you are paying something and you are getting nothing in return, and you cannot do any of the other options. Like I said, mentioned cost cutting. If you cannot get any more for your money because they're simply not open and they're not supporting you, and if there's no point investing anything more in them, I think it's a very fair conversation to say, look, well, you're not giving me anything in the current time. Can you do something around that? Of course, you can have a conversation and see what they're going to do. And again, it filters onto the call on Friday. This is where, if that business is not willing to pivot to support that business, or is not even capable, because again, it might just be industry-wise, it's not possible for them, then again, it's worthwhile having a conversation. And most businesses that are being successful in the current climate are pivoting in some shape or form and prepared to pivot to bounce back the other side. Hence the reason I'm wanting to run these webinars, to give you guys the best chance also. So final questions as well. in the last 5 minutes. Well, I'll ask one more. Has everybody found that helpful? Everybody got quite a bit out of that. Hope silence is positive. Brilliant, Fab. I'm going to just stop sharing my screen there now. So next steps for people, again, I like to kind of get action plans in place there now. Next steps, everybody, get on that webinar on Friday. So you get on that webinar, we'll talk about pivoting the business and how you can change things around that. If you want access to Float, drop me an email for all my clients there. We can plug that in. And then just arrange the one-to-one calls thereafter to obviously kind of make sure you get the value out of that. One final question I've just seen filter through there. Do you think tax increases will be dependent on what we use in the government incentives? No. That's the brutal answer. I don't think the tax system has the functionality to differentiate. So what I believe the question's more so aimed at is certain businesses are getting more support than others. Is it fair to say the government will, with any increase in taxes, make sure those are more supported pay the highest rate of tax? No. That's just my personal opinion. I don't think the system is able to do that. I think it'll be a broad brush approach. So I think company tax rates will go up. I think personal tax rates will go up. And I think assistance around several other things might get tweaked as well. But that's only my personal opinion. But I don't think they'll be able to differentiate to say the various amount of tax breaks around that. And hopefully I'm wrong. But no, because again, you've also got the complexities in different trades. Certain trades are going to be impacted more than others. So again, they wouldn't be able to flex things too much around that. But like I say, personal opinion, let's watch this space. So if there's nothing more, I shall leave things there. Any queries, feel free just to get in touch with us. Everybody's got my email address on there. I appreciate everybody on this call is clients, even people that aren't clients. Graham@gtaccountants.com. Please feel free to get in touch. We've got resources on the website, www.gtaccountants.com as well. And I say thank you for everybody attending. So stay safe, stay healthy, and anything more we can do to help, just give us a shout. So thank you much, everybody, and take care.